the DXY, and the US 10-year. So the DXY, which is short for the US dollar index, is a measure of the US dollar on its own. You see how in Forex we look at the strength of one currency against another, we look at them in pairs, right? Well, the DXY is one currency, is the dollar on its own. So when we are looking at the DXY chart, we are seeing in real time the strength of the dollar currency. This is the chart I reference to the most. Although you cannot directly trade the DXY chart, you can use it to accurately determine a bias for pairs crossed with the US dollar, right? So GBP USD, Euro USD, etc. The biggest driver for the dollar is interest rates. If interest rates increase, so does the strength of the dollar, right? And vice versa, they decrease, so does the dollar. They are positively correlated, right? You'll be able to backtest it yourself and see the correlation between interest rates. Drop the microphone, sorry. Interest rates and price. Now, although we cannot directly trade the DXY, it is a vital tool in bias and analysis. Okay, I look at this chart on my higher time frames before any other chart. So the pairs crossed with the dollar, so the XXX is, you put that there instead of putting Euro USD or GBP USD because it's for any pair that is crossed with the dollar, right? These are inversely correlated to the dollar. Now, this inversely correlated means, so when the dollar, so the DXY goes up, Euro USD will go down. When DXY goes down, Euro USD will go up, and so will GBP USD. It will go up and down negatively against the DXY, right? I will show you what I mean, but that should hopefully make sense. So this is where I do the meat of my higher time frame analysis. Everything on the higher time frames for me is done on the DXY. If you can analyze where the DXY is going, you can be certain about your bias for inversely correlated pairs. So if you are certain in your analysis that you think, okay, DXY is higher, you can be for sure that Euro USD, GBP USD are going to be going lower. Now, if the DXY is unclear and a bias cannot be determined, we introduce the next chart, right? The US 10-year. Now, this chart obviously is the US 10-year Treasury bond yield. This is another chart we use to determine a bias when the DXY is unclear. You cannot trade this chart. This is just used to sort of aid in your analysis for the DXY, right? Now, we use this chart because as traders, getting a look into the current country's economy is crucial if you want to take this seriously. Now, this may seem daunting, having to look at the strength of an economy, having to look at like COT data, etc. It's really simple. Okay, it just seems hard because you're new, but once we get into it, you will find how easy it is. Now, if you're stuck for a bias on the dollar, you will look into the US 10-year and you will see that there is an underlying strength or weakness. Right? If the DXY is consolidated, but the US 10-year is rallying bullish, it is likely you will see the dollar follow, and vice versa. However, sometimes there will be an inverse correlation. So the US dollar or the DXY will be going up while the US 10-year will be going down. This means that inversely correlated at the time. This may indicate unfavorable conditions. I found in my trading that the best conditions are when these two charts are positively correlated. Okay, it really does. If you backtest this yourself, you will see that when they move in tandem, it just cuts through price. So to simplify it, DXY is bullish. That means Euro USD is bearish. DXY bearish, Euro USD bullish. DXY consolidated, Euro USD will be consolidated. 10-year bullish, DXY bullish, favorable. US 10-year bearish, DXY bearish, favorable. And then US 10-year bullish, DXY bearish, unfavorable, and US 10-year bearish, DXY bullish, unfavorable. Right, let's write that down. Now, there will be times where the US 10-year and DXY inversely correlate, and there are still good setups. We will be going into greater detail on favorable and unfavorable market conditions. Do not take what is said on the US 10-year and DXY to be 100%. It's not a certainty, right? If everything in trading was certain, it would be easy, right? But on a large scale, more often than not, what I said stands true. Just use it as another layer onto your trading or another confluence. So on TradingView, up here, you type DXY. This is the dollar chart, right? So we're on the daily. Every single day, every single candle is a day, right? This is the strength of the dollar. Now, we will look at, you just put in US 10 indices, right? This is the US 10 year. You need to add these to your watch list. Now, let's take a look at the DXY. Let's go into the weekly. From March till the mid of April, there was this bullish move, right? Now we look on EURUSD. March to the mid of April, bearish move. Then what followed after this bearish move? A bullish move. So from the 15th of April, we kind of just went up to the 3rd of June. Look back at the DXY, we're going down. Okay, so we can even look on the hourly. Right, yesterday on the DXY, we just went down this energetic move to the downside. Look on EURUSD, this energetic move to the upside. So you will do your analysis here. You always refer back to the DXY, right? Right now the charts are a bit. I'm looking at the April's monthly low since we took this out, but yeah, the markets are just, there's nothing really here, right? You do your analysis here. Okay, I think this will be bullish. So, like, let's say I think, okay, price is going to go like this, reach for here, then EURUSD, it's inverse, right? So you think, okay, price is going to come to here, and you trade here, right? So you do the bulk of your analysis here, and then you look for entry here. Simple as that.